Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video lecture. In the earlier sessions, we discussed about various provisions in relation to the residential status and tax incidents. Let us quickly recapitulate the core provisions of this chapter before we move on to solving some of the problems in this chapter. So basically, the determination of residential status of individuals is contained in section 6, with section 6(1) talking about the basic conditions, section 6 talking about additional conditions. These two sections you can remember easily. So 6(1), there are basic condition number 1 and basic condition number 2. You don't need to write these words in the exam. This is only for remembering them easily. So what is basic condition number 1? An SASI will be called as a resident in India if he stayed in India for a period of 182 days or more, or if he stayed in India for a period of 60 days or more and 365 days or more during 4 years immediately preceding the previous year. That is basic conditions. And additional conditions are those we are checking for ROR, let us say. Then we can call somebody as ROR if he stayed in India for 730 days or more during 7 years immediately preceding the previous year, and he was a resident in India for at least 2 out of 10 years preceding the previous year. Then we can say that person is ROR. If not, that person is RNOR. If a person did not satisfy the basic conditions at all, then that becomes non-resident. So this is how we have to check the residential status of the persons, when we can call that person as ROR if he satisfies at least one of the basic conditions and both of the additional conditions. Then it becomes ROR, at least one of the basic conditions and both of the additional conditions. That is what ROR is all about. So that is the checking point for ROR, at least one of the basic conditions and both of the additional conditions. What about RNOR? RNOR must satisfy at least one of the basic conditions. Of course, then only he is resident, but either one or none of the additional conditions. Even if somebody satisfies even one additional condition also, that becomes RNOR. If he satisfies none of the additional conditions, anyway is RNOR. So in order to be ROR, anybody has to satisfy both the additional conditions. If additional conditions are presented in this way, what are the additional conditions here? Being a resident for 2 out of 10 years preceding the previous year, or staying in India for 730 days or more during 7 years immediately preceding the previous year. Those are the additional conditions. So you should be very clearly remembering this entire basic conditions and additional conditions with the section numbers preferably. Then we should also check what the residential status of an individual will be according to what combination of conditions that person is satisfying. Imagine somebody did not satisfy any basic condition, then he becomes non-resident. So if somebody satisfies one basic condition and one additional condition, only one basic condition and one additional condition, then he becomes RNOR. So we can have some combinations like that for your general understanding purposes. Let us say one basic condition, one additional condition becomes RNOR. One basic condition, both additional conditions or two additional conditions becomes ROR. Two basic conditions but one additional condition, still RNOR. Two basic conditions and two additional conditions, if all are satisfied, then again ROR. None of the basic conditions are satisfied, then he becomes non-resident. So depending upon the combination of how a person satisfies these conditions, the residential status of an individual will be determined. Of course, there are some other exceptions to this general calculation, wherein only in some 3 cases we have basic condition number 1 only has to be applied. That is, a person will be called as a resident in India only if he stayed for 182 days or more during the previous year. What are those things? For an Indian citizen leaving India during the previous year for the purpose of job or For an Indian citizen, once again leaving India during the previous year as a crew of an Indian ship. Same way, for an Indian citizen or a person of Indian origin who is coming to India on a visit. In any of these three cases, we will not apply the basic condition number 2. We will apply only basic condition number 1. So basic condition number 2 is not at all applicable in these three exceptional cases. So these are the conditions that everybody should remember. Basically, the determination of residential status of individual depends upon these core areas to be noted and remembered always. In addition to that, we know some other additional points, like for example, the day of entry and the date of departure both have to be calculated for counting the number of days whenever we calculate them. And the stay need not be continuous, we know that. And the stay need not be also at the same place. And the purpose of stay is immaterial. Absolutely, that is useless. Why is here in India? We don't care. In India or not in India only matters. Where is he? Why is he? Continuously was he here or not? Those things do not matter. Number of days means number of days, that's all. Any other additional unnecessary information we have to ignore. That is about determination of residential status of individuals. Same way, it is all just given as a simple flow chart. You can just observe this. Let us say if B1 or B2, any one of them is satisfied, yes, then somebody becomes a resident. If B1 or B2 is not satisfied, no, that means individual is non-resident automatically. Okay, once he is a resident, we have to check A1 and A2. A1 and A2 both satisfied, yes, ROR. If A1 and A2 not satisfied, means either only one of them is satisfied or none of them is satisfied, then we can call that person as a resident, but not ordinarily resident. So in a simple flow chart way, we can understand this entire flow chart in a simple way, wherein the residential status of individuals can be determined one by one, step by step. Directly it will not be coming out. We have to identify them one by one. So whether basic condition number 1 or 2 is satisfied, yes or no. Yes, resident, no, non-resident. Once resident, you have to check additional condition number 1 and 2. Observe here very carefully. Here we are talking about basic condition numbers 1 or 2. Here we are talking about additional condition number 1 and 2. There is a difference between these two. That observation is required. So if both additional condition number 1 and 2 are satisfied, then he becomes ROR. If not, he is RNOR. This is the simple flow chart for determination of residential status of individuals. Very important point. Of course, there is a special case related to the crew members of the ship that we know that the only main word there you have to remember is the word continuous discharge certificate. So the date when the name of such person is entered in the continuous discharge certificate and when he has signed off in the continuous discharge certificate, in between these two dates, that person is deemed to be outside India. So that will be excluded from the period of stay of such person when calculating the residential status in relation to the crew member of a ship. That is a special case. We did some question also, and only main point here is we have to remember their continuous discharge certificate. Continuous discharge certificate is a document in which the date on which the person has entered the ship and exited the ship will be written. Once he is in the ship, by entering into this document, it is as good as he is out of India, even though practically, physically, he may be in the territorial waters of India. That thing we don't care. And we are not talking about everybody here. Always you have to understand, we are talking about only an Indian citizen. This facility of continuous discharge certificate and all, it should not apply to everybody. This is only to an Indian citizen we are talking about, and who is a member of crew of a foreign bound ship leaving India. In that case only, for an eligible voyage, this type of calculation for continuous discharge certificate will be useful. Otherwise, for normal people, normal calculations are anyway useful. So this is about determination of residential status of individuals. Okay, once we have the determination of residential status, then tax incidence will depend upon the residential status. That's what we can call as scope of total income under section 5. And this is a table which can summarize everything, whether it is taxable or not taxable. T means taxable, NT means not taxable. So this table itself summarizes all the provisions of section 5 in a simple nutshell. If income is received or deemed to be received in India, it is taxable in all cases. If income is accruing or deemed to accrue in India, then also it is taxable in all cases. But income accruing or arising outside India from a business controlled in India or a profession set up in India. So business controlled in India or a profession set up in India. This is a special case. Of course, it will be taxable for ROR, and you have to observe that. For ROR, everything is taxable, so we don't need to separately look at that. For RNOR and NR also, it is taxable if either the accrual or the receipt is happening in India. Then also everything is taxable. So up to this point, everybody will have the taxability above this point. But below this point, we have special cases. Like what? Whether the business is controlled in India or profession set up in India. If yes, then it will be taxable. Taxable, that will be for even RNOR also. But of course, it is not taxable for non-resident. So non-resident will have taxability only in the first two cases he will have the taxability. That's it. This is the only restricted area of non-resident being taxable. What are those? Income either received or deemed to be received in India, income either accrued or deemed to accrue in India. That's all. Then only it is taxable for non-resident. Otherwise, it is not taxable for non-resident. So that is a very clear indication of non-resident's taxability. What about resident? Resident always taxable. So that is why resident we don't have to worry. Always resident taxable. So all of them are having same thing, that is taxability. So for non-resident, there is no problem. Only when taxable, when not taxable, it is clear. For resident, it is clear that every time it is taxable. So only point comes with whom? RNOR. That is where you have to be careful. Of course, whatever is taxable for ROR and NR, it is taxable for RNOR also. Up to here, there is no difference. That is the same. So one and only thing that will be different for RNOR is that where the income is accruing or arising outside India, of course, received also outside India, but business is controlled from India or profession is set up in India, that becomes taxable for RNOR. That will not be taxable for non-resident. Of course, if the income comes for RNOR under any other source, like if it is accrued outside India, received outside India, but business is not controlled from India, then nothing is taxable for resident, but not ordinarily resident also. So this is the one who is in between ROR and RNOR. We cannot say global income is taxable. We cannot say nothing is taxable other than what is received or accrued in India. So both ways, we cannot conclude on the both sides, but RNOR will be somewhere in the middle. What is that extra point that RNOR carries? About these words you have to remember. The business which is controlled in India or the profession that is set up in India. For those type of incomes, RNOR becomes also liable to pay tax. That's it. That is the summary of section 5. And the residential status of other persons, we know that already. For HUF, what was the important word there? That is a control and management of its affairs. If it is wholly or partly in India, HUF becomes a resident. And for AOP and firm also, as well as for any other person also, the calculation is very similar. Means what? Always we have to look for control and management of affairs. So control and management of affairs, either wholly in India or partly in India, everybody, HUF, AOP, firm, any other person, everybody becomes resident. And in case of company, Indian company is always resident. We know that Indian company, we don't need to check anything, always resident. If that company is not an Indian company, it will be resident only if POEM is in India. POEM means place of effective management. That is for companies. So for other companies, other than Indian companies, if POEM is outside India, they become non-residents. So who becomes a resident or non-resident here? For companies, Indian company is always resident. For other companies, if POEM is in India, they are resident. If not, non-resident. Same with AOP, BOA and all other persons. If control and management of its affairs is wholly or partly in India, resident. If not, non-resident. So when if not means what? If the control and management is wholly outside India. So then it's the same thing as HUF here also. So for all others like AOP, firm, other person, HUF, the basic calculation or determination of residential status, resident and non-resident, is going to be same. There is no difference in that case. But when it comes to HUF, there is another possibility of the HUF being ROR or RNOR. How does it how is that going to be determined for HUF? That also we know. For this purpose, we have to look at the Karta's additional conditions, not residential status. So if the Karta satisfies both the additional conditions, HUF becomes ROR. If the Karta does not satisfy any of the additional conditions, then the HUF becomes RNOR. Any of the additional conditions means If the karta satisfies only one additional condition also, R and OR. If it is not if the karta is not satisfying any of the additional conditions also, then both the additional conditions also, then also R and OR. So when R OR, the HUF will become only 1 point if the karta satisfies both. Again, we have to be always clear. When we check this 2 out of 10 and 730 out of 7 years conditions here, what we have mentioned, always it is and. And is the word that has to be always carefully understood. Yes, then only ROR. No, R and OR. Same logic applies to Karta also. But here we are not determining the residential status of Karta. Understand that we are determining the residential status of HUF. So that is about determination of residential status for other persons. Determination of residential status of individuals is in section 6. 6.1 and 6.6 you should refer. Section 5 we should refer if we are talking about the tax incidence of different incomes depending upon the residential status. And poem, as we discussed earlier, what is place of effective management? It means the place where the key management and commercial decisions that are necessary for the conduct of the business of an entity as a whole in substance are made. That is a definition given by law. That is for understanding purposes. Where all the key decisions are taken, we can call that as place of effective management. And once we understand section 6 and section 5, we need to also look at section 9, wherein we have certain incomes which are deemed to accrue or arise in India. What are those incomes? Everybody has to be very much perfectly aware of section 9. What are those incomes which are deemed to accrue or arise in India? Income through or from any property or any asset or any other source of income in India that is deemed to accrue or arise in India. Income through the transfer of a capital asset situated in India, also already part of section 9. Same way, income is chargeable under the head salaries if such income is payable for services rendered in India, or even for the period of leave also. That doesn't matter. Even then, it will also be part of the income under the head of salaries will be taxable in India as if it is deemed to occur or arise in India if the service is rendered in India. And not only that, leave salary also. Leave salary which is preceded and succeeded by the services rendered in India also forms part of service. So that is another additional point, not that important, but that is also in relation to the service rendered in India only. So that also forms part of this income deemed to occur or arise in India. And very another important point, the salary paid by government to any citizen of India for services outside India. So that is also taxable because it is deemed to occur or arise in India. So salary paid by the government to a citizen of India for the services rendered outside India will be taxable in India under section 9. But now the topic has come and there is a question that we have to do also. However, the allowances and perquisites payable by the government outside for the same person who is a citizen of India, and allowances and perquisites are payable by the government outside India, they are exempt under section 10.7. So this section you have to remember that. Now, not only the provisions of residential status, since we have certain cases where the other provisions under the other parts of the act also applicable, we should know them. We cannot say, I don't know section 10.7. Now know it. Now know it. Nobody is expecting you to know the entire income tax act. You are not robots. Just by looking at the income tax act, all the sections will not go into brain. So one by one we will know it. Now that we know certain sections like section 6, like section 1, 6 or 7 or 5 and section 9, all the sections are there which are discussed earlier. Now we are knowing one more section, that is section 10.7. What does it tell? It tells that the allowances and perquisites which are payable, allowances and perquisites only, not the salary. Salary will become taxable, whereas allowances and perquisites are exempt. Allowances and perquisite payable by whom? Payable by the government. Where? Outside India. To whom? To an Indian citizen. Same thing what was taxable under section 9, just a different thing. Allowances and perquisites for the same people is exempt under section 10.7. This section number you have to remember, that is an exemption section. So that is one exemption we started. We are going to come with some more exemptions before solving the problems. So 10.7 is one thing that you should remember as an exemption. Next, another point here, the other one is again coming back to section 9, the dividend which is paid by an Indian company outside India also, of course, is part of section 9, but again it will be exempted. That also will come to know, that is section 10 subsection 34. So 1034 is one which exempts the dividend, And now dividend normally becomes taxable under section 9. We'll come to those additional provisions before or while solving the problems. But mainly the provisions of residential status, they talk about these things. So dividends paid by Indian company outside India also is deemed to accrue or arise in India. First of all, that's what it is. Then very importantly, this one, the any income through or from any business connection in India, and we discussed extensively what is business connection and what is not a business connection also. If there is business connection, then automatically that income is deemed to accrue or arise in India. So these are the various points that we should generally remember while solving the questions and cases. Particular points in the problems can be given which where we have to refer to these things. We cannot directly say taxable, not taxable, I think it is taxable. All these things will not give us any marks. We need to refer clearly to section 9. According to section 9, so and so point, because this provision tells this, okay, so and so amount is taxable or so and so amount is not taxable. That has to be clearly written. For that purpose, you need to remember section 9, which are incomes deemed to accrue or arise in India. What are those things? Income coming from any property or asset or any other source of income in India, income coming from transfer of any capital asset in India, income coming from salaries for services rendered in India, salary paid by the government to an Indian citizen outside India for the services rendered outside India, dividend paid by an Indian company outside India, any income through or from business connection in India, and interest, royalty or fees for technical services also will become taxable. This also we have seen. Always whatever is payable by government always what? That is going to be definitely taxable. So that means what? That is always deemed to accrue or arise in India. So for government, we don't need to worry. Always that is going to be deemed to accrue or arise in India. For government means not government receiving money, sir. Government is paying the money. So interest on money borrowed or royalty or any other fees for technical services payable by the government is always deemed to accrue or arise in India. Payable by a resident or non-resident. Of course, when you call this in both the sides, ultimately the logic is same. If the amount is payable by resident, it is deemed to accrue or arise in India, except when it is used for a business or profession carried on outside India. We are talking about means what? Except outside India means what? Automatically in India this money has to be utilized on which the interest is being paid. Same way non-resident. It is deemed to accrue as in India only when it is used for the purpose of business or profession carried on in India. So both are similar. Here we are talking about as an exception. Here we are talking about as an inclusion. Ultimately the essence is same. What is the essence here? If the resident pays the interest, it is taxable. When it is not taxable, only when payable by, we are talking not received by, we are not talking about received by here, we are talking about payable by. So payable by resident, how does it matter if a resident paid it, and why he paid it? He paid it for a business or profession carried on outside India, let us say. Then recipient may be a non-resident. If recipient is non-resident, it cannot be taxed in India because that money is not used in India. But if the payer is a non-resident, then it is taxable only if it is used for the purpose of business or profession carried on in India. So the essence of these two things is ultimately the same. So basically what we have to understand, we don't care whether it is payable by resident or non-resident, because you call this way or you call this way. Either way, ultimately the essence is same. Means what? When is it going to be taxable, sir? When it is taxable? When the money on which the interest is being paid is utilized in India. Then only it is going to be considered as if it is deemed to accrue or arise in India. Same logic applies to royalty also, fees for technical services also. But the only point is, in case of some situations, instead of using the word business or profession, we can also use the word source, any other source of income where we may use that word. That doesn't make any difference. See, basically business or profession are the only sources of incomes. Any other source of income, what else will be there beyond business or profession? There is nothing like that. So don't worry about that. Any other source of income. Majorly just focus on the word business or profession. If it is related to the business or profession in India, interest, royalty, fees for technical services, everything shall be deemed to be accruing or arising in India. That's it. These are the various provisions in relation to this chapter in a nutshell. You should remember all of them, revise all of them. Always you should be thorough with these kind of provisions. Now, let us quickly go through the questions that were given to you in the MCQ task yesterday. Most of you have done correctly for many of the questions, but as I was observing randomly, some of the answers were not really correct also. So check your answers, and not only the answers, check your thought process, so with which you have answered these questions very carefully. So let us read through these MCQs, and I don't have to again and again tell you, MCQs account for easily 30% of the overall marks in the paper of taxation and law, and that is a fantastic opportunity to score. Only those who have the absolute understanding of each and every provision will have the benefit of MCQs. MCQs is not something looks like ABCD is there, something I will put and I will get marks. It will not come like that. So it is a fantastic opportunity, but only for those who utilize it. For others, it is actually not going to be fetching the marks. So be very careful while answering the MCQs. Read the question carefully as usual. Don't take them light. MCQs are a very good opportunity, because the advantage of MCQ is if you write a correct answer, you get full marks. Nobody is going to judge you. If it is a descriptive question, your presentation matters, whether you are referring to the section numbers or not, whether you are writing working notes or not, are you showing the calculations or not. All these things matter in descriptive questions. So scoring in descriptive questions full marks will be definitely tedious task. But when it comes to MCQs, if you really know the answer, absolutely you get full marks, 100% marks. That is the advantage. You have to use that advantage. So don't be in a hurry to answer the questions. Read them carefully, then come to a correct thought process, then put the answer. So don't jump to ABCDs. That is the danger. Most of the times people will put wrong answers because of that. Psychological things. More than subject, I would give a lot of the negative problems in relation to this course to psychological attributes rather than knowledge. Knowledge, of course, is one part. But psychologically, if we are not fit or not doing the right things, then also there is a possibility of losing the marks. And the other problem with this course or this paper or any other paper for that matter is every mark counts here. So that 1 mark or half mark or 1.5 mark or 2 marks, wherever we have little bit of small mistakes and small leakages, they may lead to really a bad result. So then people don't understand why this bad result is coming. So on the other side, good result also will come like that. 1 mark, 1 mark, 1 mark, add it together. Then only the overall marks that we score will come. So score generally will not just appear in front of us. So the fight to get each mark has to be very committed and intense fight. That has to be there. And that intensity is purely a psychological thing I'm talking about. So that is what required for answering the question. So read the question carefully and answer the questions with right approach is what I'm talking about. So first question, Abhay earns the following income during the previous year, ended 31st March 2020, of course. Interest on UK development bonds and 1/4 being received in India, and some 2 lakhs rupees is given. We don't know what is it and all. Profits on sale of a building in India but received in Holland somewhere. That is 2 lakhs. So income liable to tax. Liable to tax. We are talking, not talking about tax liability. This is where tax liability is different. Income liable to tax is different. That is completely different. This is what I was talking about. So what is this income liable to tax? Income liable to tax means taxable income, not tax liability. So taxability and tax liability both are different. That difference always has to be identified. So how much is the income liable to tax for the assessment year 2021? For all this, we need to know what is the residential status of this Abhay. And what is given here? Resident and not ordinarily resident he is talking about. So he is the RNOR. That is the residential status of Abhay. Now we can think about what about all these incomes that he has. Okay, first point. Interest on UK development bonds. UK development bonds will be in UK. You cannot say I assume UK development bonds are in India and all that, nonsensical. So that is not in India. So that is definitely some interest which is related to some income which is outside India, that is 2 lakhs. But normally it should not be taxable, but 1/4 being received in India. So in 2 lakhs, 1/4 means that is 50,000. So 50,000 will be taxable definitely for RNOR. So keep that aside. 50,000 is definitely taxable. Then second income, that is profit on the sale of buildings in India. See, the moment we say profit on the sale of building in India, section 9 will kick in. Section 9 says what? Profit or gain arising from the transfer of any property or asset or any source of income that is situated in India is deemed to accrue or arise in India. So where is it received? It doesn't matter. Since it has accrued in India, it is fully taxable in India. And how much is the amount of that? That is 2 lakhs. So 50,000 here, 2 lakhs here. Total answer is 2 lakhs 50,000. So that is the final answer A. That is the final answer for question number 1. A is the correct answer. Check your answer and find out if it is wrong, why is it wrong. So 50,000 here, 2 lakhs here, 2 lakhs 50,000 is the correct answer. Some calculation is required here, a little bit of that. Then question number 2, straight question. If Karta is a resident and ordinarily resident in India, but control and management of HF is situated partly outside India. So this is where you have to be careful in understanding. When he says partly outside India, means partly in India also, right? When it is partly in India, the HF is resident, right? When HF is resident but Karta is ROR, means Karta will be ROR when if he is satisfying both the additional conditions only, right? So HF is a resident and Karta is satisfying both the additional conditions, means HF will be resident and ordinarily resident. So that is why. So the correct answer here will be ROR. That is the logic we have to understand. One, the HF is having control and management partly outside India, which means partly in India also. So basically this HF is R, that is resident for sure. Then coming to the next level, the Karta's residential status being ROR means we don't care about the basic conditions. Of course, you would have satisfied 1 or 2 of the basic conditions. Then only is R, right? First of all. And that doesn't matter to us. What matters to us is whether Karta satisfies both of the additional conditions or not. If yes, then only he will be ROR. If he is not satisfying both the additional conditions, then he will not be ROR. And here it says he is ROR. So definitely when he is ROR, the HUF also will be ROR. Once again, not always. Not always. Because the Karta, the HUF is basically resident, we are checking about Karta's additional conditions. If HUF itself is non-resident, Karta's residential status do not have any impact on HUF's residential status. In this case, the residential status of HUF is ROR. That's the answer A. For second question. Third question, Paresh is a software engineer at ABC Limited, left India for the first time. For the first time he has left India. That is the first point you have to identify. On when? 10th August 2019 for the treatment of his wife. Once again. Why he went also that matters. For the treatment of his wife he has gone outside India for the first time, that too. And for income tax purposes, what is his residential status for the assessment year 2020-21 is the question. So this is like a little tricky question. A lot of you got the wrong answer. Of course, is it really wrong? I would not say, but definitely for MCQ purposes, it is wrong. Why is that? Let us understand. So first point, definitely most of you have identified that this guy falls under exceptional category or not. That we should identify. When will be called as an exceptional category? When can we say that he is an exceptional category? When that person, any SSC, is leaving India for the purpose of employment, including self-employment. That is okay. For the treatment of wife, for going out and watching some, as a tourist. No, that is not exception. So definitely this person, though he did not stay for 182 days. Did he stay first of all? Did he stay for 182 days? That also you can check. April, May, June, July, August. August how many days? Only 10th August he says. So how many days he stayed actually in India during the previous year? That has to be first calculated. April 30, May 31, June 30, July 31, August 10. So total 132 days he has stayed in India. That is for sure clear. That is, we are talking about 132 days in India during the previous year. So stayed for less than 182 days in the previous year. So now the question comes, did he stay in India 182 days or more? No. So basic condition number 1 not satisfied. Should we check second condition or not is another question. We should. Why? Because he didn't leave India for employment. He left India for the treatment of his wife. So definitely second condition will apply. Second condition applies means what? Second condition applies means the person who has stayed for more than 60 days in India and more than 365 days in 4 years immediately preceding the previous year. Did he do that? Yes. So what is the residential status of this person? That is R. That is resident. That is directly resident, definitely yes. So once he is a resident, we cannot directly say that he is not ordinarily resident. Resident is not a residential status. That's what we have to identify. A lot of you have kept as resident as an answer. I would not say it is wrong, but it is not really correct also. Why? Because here the resident is not a residential status. What is the residential status? Residential status is something like ROR or NOR or NR. That has to be clearly mentioned. So that is why we cannot actually determine this from the above information is the correct option, though it is not really 100% correct. Resident is also not correct. So really the residential status of this person will be ROR. That is the residential status of this person. If it is there in the options, it will be there. If not, we can say actually none of the above. That does not mean cannot be determined and all. It means basically none of the above. So which is the correct option? None of the above. We cannot say resident is a residential status. That is a point to be noted here. The essence of this question is resident is not a residential status for an individual. For an individual, residential status will be three. Either resident and ordinarily resident, resident but not ordinarily resident, three non-resident. That's all. Resident only just mentioned. For individual, it cannot be called as a residential status, particularly speaking. But in spite of all this, so don't worry about the final answer. If you have kept A as an answer, that should be okay. Don't worry about that. If A is also mentioned as an answer, that is not a problem. But what is the correct thing? Ideally, it should have been ROR. Ideally, that should have been the case. Right? Next. Question number 4. Income accrued outside India and received outside India is taxable in case of who? Naturally, only for ROR. It is not taxable for others. So only for ROR it will be taxable. If it is accrued also outside India, received also outside India. Direct question. Question number 5. An Indian company would be always resident. No, we don't need to check anything. No, only no poem, no control management. All these things are nonsensical. These are all not going to be useful at all. So when that will be resident, always resident. Irrespective of control management, Indian company is always resident. So correct answer is D, Delhi. Then question number 6. Determine the resident status of HUF. If HUF's control and management is wholly situated in India and Karta of HUF is a non-resident in India. So here what could be the situation is asking. So residential status we cannot determine, actually speaking. If there is an answer here, cannot be determined from the given information. That could be the answer here also. But here the options are different. Here option is given either ROR or RNOR. Yes, definitely those are the only possibilities now for HUF. First of all, the HUF is what? Definitely R resident. Means why? Because it is having a control and management wholly situated in India. So definitely resident. See, once it is resident, it will have to be either ROR or RNOR. Can we know what it is? Can we know that? No, we cannot know that. Why? Information is not sufficient. Karta of HUF is a non-resident does not mean we know anything about his additional conditions. We don't know about his additional conditions. So absolutely information is not sufficient for determining it, but we can say either it will be ROR or RNOR. One of them definitely yes, because basically it is resident. There is no other option other than being either ROR or RNOR. So that is why the correct option here also will be D, Delhi. Then question number 7. Profits of the 1 lakh rupees for the year 2015-16 of a business in Germany remitted to India during the previous year 1920, which were earlier not taxed, but now they are remitted to India. Will they be taxable? Absolutely no. They are not taxable in India for anybody. For anybody, they are not taxable for two reasons. One, remittance is not receipt. Two, they are not related to the previous year 1920. Always we have to check the timing of the income. Whether the income is pertaining to the previous year or not, that we have to check. If the income is not pertaining to the previous year, if it is pertaining to some year which is much before the previous year, how can it be taxable now in this previous year? How can it be taxable for the assessment year 2020-21? Not possible. So we have to again remember and recollect the 3 points for taxability of any income. For taxability of any income, residential status matters. place of accrual or receipt of income matters, and time of earning the income also matters. Time means during the previous year it should be earned, not prior to that. So if anything is earned prior to that, then not taxable, but now we are receiving that, absolutely nothing happens. Nothing will be taxable in the previous year, 2019-20. And that is one point. Second point is remittance is not receipt. Originally it was earned earlier, that the same money that is now just remitted to India. So that doesn't make it an income. So remittance cannot be considered as a receipt, and income which is not pertaining to the previous year is not taxable for anybody. So this has nothing to do with residential status. Residential status is different. First of all, tax incidence itself does not arise, since that income does not belong to the previous year. So that logic applies for question number 7. So the correct answer is B, Bombay. Then question number 8. Profits of 2 lakhs rupees is earned from a business in USA, which is controlled in India, and half of the profits are received in India. How much is taxable for a non-resident is asking. If it is ROR, anyway entire amount of 2 lakhs will be taxable. If it is for RNOR also, entire 2 lakhs would have been taxable. For non-resident, 2 lakhs is not taxable, since half of them are only received in India. How much will be taxable? Only 1 lakh will be taxable. So the correct answer here will be C, that is 1 lakh. That is question number 8. Why? This person is non-resident. Only what will be taxable is that which is either earned in India or received in India. It is not earned in India, but it is received in India, but not fully, half only. So 2 lakhs half means 1 lakh. That is the answer. Then question number 9. Dividends from British company of 2 lakhs rupees received in London will be taxable in case of whom? Because income is related to outside India, received also outside India, naturally it is taxable only for ROR. For all others, it is not taxable. That's it. Straight question. Once again, question number 10. Mr. Ramji, aged 55, is a Karta of HUF doing textile business in Nagpur, but this guy Karta actually resides in Dubai in the past 10 years and visited India for 20 days only each year for filing the income. Why he comes, we don't care. This is all nonsensical information. For filing income tax returns, blah, 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 he visits 20 days. Unnecessary. Visits 20 days matters to us. So definitely this Karta is a non-resident, no doubt. Anyway, it doesn't matter to us. But what matters to us is, does this Karta satisfy the additional conditions? No way. Because he is every year non-resident in the past 10 years. He should be at least resident for 2 out of 10 years. He is not. So definitely he cannot be satisfying any of the additional conditions. Not possible. So he could not be here for 730 days in 7 years also, not possible. So for additional conditions, Karta doesn't satisfy any of them. But as far as HUF is concerned, we don't care about Karta. We care about where the business is being done. For that purpose, the information is given. His 2 major sons take care of the day-to-day affairs of the business in India. So where the control and management of affairs is there, control and management of affairs is in India. He is not controlling. His sons are controlling the business. Major things are happening. His major sons are handling the business in India. He's only just coming 20 days every year just for some procedural things and going out. So control and management is not with him. From the information available, we have to identify that. We cannot say he is Karta, right? He will have control. You are not the one to decide. I am not the one to decide. The question what it says? It says that majorly the day-to-day affairs are all taken care of. The business is in India, first of all, which is at Nagpur, and his sons are handling the business in India. So definitely the control and management of affairs is happening in India only. He is not doing anything control from Dubai. So basically HUF is what? Resident. That is for sure. That is for sure. HUF is a resident, guaranteed. But the question comes whether it is ROR or NOR. Now we have to check the Karta's additional conditions. As we have already seen, Karta never satisfied even one additional condition also. That means the HUF's residential status is resident, but not ordinarily resident, RNOR. That is the answer for question number 10. That is C. Then question number 11. When a capital asset is located in India, is sold by a non-resident to another non-resident at a place outside India. See, all these things do not matter. What matters? That asset is located in India. So what is asking? What matters here? It is taxable at the place of transfer or transferee or both? No, none of that. It is taxable at the place where the location of the asset is there. What is the location of the asset? In India. So naturally it is taxable in India. By a non-resident, to a non-resident, at a place outside India, all of that is irrelevant for us. Where the asset is located in India, automatically that becomes taxable in India according to section 9. Section 9 has a particular point related to this. You need to remember that to answer this question. So C is the correct option for question number 11. Then I have question number 12. Thomas Incorporated of Australia borrowed money from various companies in Australia for doing business in India. So every word we have to read very carefully. They borrowed money, blah, blah, blah. All this is okay. What? For what? For what? For doing business in India. So when we have this word, that is enough. That is enough. And it paid interest, whatever amount is. The amount of interest paid has accrued in India. It is taxable in India. In the hands of Thomas? No, sir. Not in the hands of Thomas Incorporated. It is giving interest. Who is earning interest? Somebody else who we don't know them. That we don't know. Whoever is receiving this interest of 500 lakhs, 1%, 2%, 40%, we don't know. For those lenders, that income will be considered as if it has accrued in India. Understand always the difference. The person who receives the money is the one who is the SSC. He is the one who has to pay tax, not the one who is giving the money. So here what Thomas Incorporated has done, it has borrowed the money and it is giving interest. When it is giving interest, paid interest, how can there be anything taxable for Thomas? Nothing will be taxable for Thomas. But it will be taxable for those who are the lenders to Thomas Incorporated, since the money what they have lent has been used for a business in India. So that is as good as interest paid as accrued in India. So answer is A, according to once again section 9. Then question number 13, little bit data is given. This is a past examination question. Raman was employed in Liver Limited. He received a salary of 40,000 rupees per month from April to 27th of September. He resigned and left for Dubai for the first time on 1st of October. Don't ask me what he did on 28th, 29th and 30th. That is none of our business. Maybe he did shopping for going abroad and all. Still doesn't matter to us. We don't care about those things, minute, unnecessary details. Main point for us is we need to know the date on which he has left the Dubai. He has left to India, where he went also, we don't care. He went to Dubai, America, we don't care. Address is he has left India on 1st October 2019. So definitely we need to understand what is the residential status of this person according to that. Is he the one falling in exceptional category, sir? Of course, yes. Means what? He will be a resident in India only if he stayed for 182 days or more during the previous year. Only then he will become a resident in India. Let us check whether he is a resident in India in the previous year or not. So we need to check the number of days of stay in India. April 30, May 31, June 30, July 31, August 31, September 30, right? So how many days he stayed in India? Whatever the number of days of stay in India, that we have to check. April, May, June, July, August, September, 30. So total how many days he stayed? 183 plus 1 October, 184 days he has stayed in India. 184 days he has stayed in India. That is the number of days of stay in India. So why this question is possible to be answered wrongly? People will calculate this. Plus when he resigned and all, who cares? So if you take only up to 27th September, maybe the calculation will go wrong. In that case, you will get only 180 days maybe. So that is where the problem is. You cannot take up to 27th September. This is absolutely a useless date. When he resigned and all, we don't care. We don't care. So this entire data is useless. That doesn't matter to us. What matters to us is when he has left India. That matters to us. So he left India on 1st of October 2019. So definitely we have stayed for 184 days. 184 days, including the day of departure, 1st of October. So more than 180 days means resident. See, when he is resident, after that leaving also from October to December, he has got his salary credited in Dubai bank account, and January to March that money was credited in Bombay bank account directly. All nonsense is completely just literally useless. Simply speaking, when some person is a resident, and ordinary resident, that is clear because he has left for first time in the previous year only. So definitely what income will be taxable? entire global income will be taxable. So the answer will be income received in India also and in Dubai also, both are taxable for that person since he is ROR. Main point is we need to identify his residential status. So this guy is ROR. So once he is ROR, every income is taxable. Automatically, all the incomes received by ROR become taxable. That's it. That is about question number 13. So the residential status of this person also matters. Since he is ROR, global income will be taxable. Where is that option? You have to check in the available alternatives. That is income received in India also and in Dubai also. That's all. That is question number 13. Then question number 14, direct question. A company other than an Indian company would be resident in India only if poem is in India. Naturally, when it is not an Indian company, it will be resident only if poem is in India. So correct answer is A. Question number 15, income accruing in France and received there is taxable in India in case of resident and ordinarily resident only. Once again, same question but asked in different way. Income accrued where? Outside India, that is in France, and received where? There only. So accrued also outside India, received also outside India. How will it be taxable? Only for ROR it will be taxable. For others it will not be taxable. Then income accruing in Sri Lanka, received in India. See, the moment we see received in India, it will be taxable for everybody, irrespective of residential status, because it is received in India. Automatically it is taxable for everybody. Then question number 17, income accrued and received out of India. Out of India from a business controlled from Tokyo. That is also out of India. First we should know Tokyo is not in India, it is in Japan. Where is it we may or may not know. That general knowledge is the second part. At least Tokyo is not in India, that we should know. Right? That much general knowledge is required. So income accrued and received outside India, controlled also outside India. So it is taxable in whose hands? So again same, received outside India, accrued outside India, controlled outside India, then only taxable for ROR. Definitely not taxable for other two types of SSEs. Then profit on sale of shares of an Indian company, every detail directly. Indian company, of course taxable in case of all SSEs irrespective of residential status, because the sale of shares of an Indian company means it is an asset which is related to India, asset situated in India. Where it is received, where it is accrued, doesn't matter. When the asset which is being sold is located in India, automatically that is considered as if the income is deemed to accrue or arise in India. So that will be taxable in respect of all SSEs, irrespective of residential status. Then question number 19 is about a company. Once again, R Limited is an Indian company whose place of effective management is outside India. Should we care that place of effective management matters at all? No sir. Indian company always resident. So this is unnecessary information. Place of effective management is useless for an Indian company. Indian company always resident. Poem doesn't matter. So our company R Limited will be resident. That's all. Even if the poem is outside India, doesn't matter. Still it is a resident only since it is an Indian company. We need to be very clear on that. Then question number 20, fees for technical services paid by central government will be taxable. Once again, anything that is paid by central government, which is fees for technical services, interest or royalty payable by central government, always taxable. Irrespective of residential status, it is always taxable since it is deemed to occur or arise in India. So these are all related to the provisions that we know only. The only point is we need to apply those provisions. So very quickly you need to revise these all provisions, remember them well. Then you need to use these provisions in applying them for solving of various problems. Right? So that is some of the things that we should know. Now, quickly let us solve some questions also in relation to the residential status. But before solving the questions, I would like to just tell one more point here. While solving the questions, we will encounter certain provisions which are not already discussed in this chapter, because those will be related to something else elsewhere in the Income Tax Act. We cannot say, I don't know that, I don't know that. Because we don't know that, we should know it now. Just for example, just now in the today's class only, today's discussion only, we came to know about section 10 subsection 7. Whatever the exception is there, section 10(7) is there, wherever that amount of salary that is paid and all, that is exempt under section 10(7) is what we talked about. So what was that exempt? Allowances and perquisites. Allowances and perquisites payable by government of India to an Indian citizen outside India are exempt. Salary is taxable, allowances and perquisites are exempt. That is what we know today. So that is an additional point that we should know. Same way, there are some other things we should know which we will encounter as some of the points while we solve these questions. We cannot say that income tax questions will follow our sequence of learning. We are learning according to our convenience, but questions given in the income tax paper will not be given according to our convenience. The questions which are given in the earlier examinations from this chapter will not be given keeping that in mind ki, while learning residential status, we don't know the other provisions of Income Tax Act. Questions will not be given like that. So questions will consider any other provisions also beyond the provisions of section 5, 6, 7 and 9 which we discussed in this chapter. If we encounter any such things, simply we should know them now rather than moaning about we don't know it. We will know them again anyway later. By the end of the syllabus, definitely we will know them. But that does not mean we can wait till that time to solve these questions. So as and when we discuss some points, we will know some things which are not discussed also. There will be always certain things which are related to future. If we don't accept that psychologically, that is going to be a biggest danger for learning of income tax. Please don't do that. I observed some of the students earlier that they have this resistance of not able to focus on the things which are not known. So that attitude will not work. Not knowing is not a crime. Not willing to know is a crime. So we don't know something, it's okay, no problem. Now know it now. You know now section 10(7) or not? That is important. Array, I don't know 10(7), problem had 10(7). That is not the attitude required here. So 10(7), we know that now. What is that? That is salaries, the allowances and perquisites which are payable to an Indian citizen by the government of India outside India is exempt from tax. Same way we know section 10(1). So certain items we will definitely come to know. We are going to definitely use those particular sections also. So section 10(7) is one thing that we have, and already we must be knowing section 10(1) that is related to agricultural income. Agricultural income that is exempt. See, section 10 is all about exemptions. Agricultural income received in India is exempt. In India is exempt. 10(7) allowances and perquisites outside India payable to an Indian citizen by the government are exempt. Same way, we are knowing where we have to know section 10 subsection 34 that is related to dividend. Dividend received from an Indian company is exempt up to 10 lakhs rupees only. So there is a limit here. Dividend is not exempt automatically fully. Up to 10 lakhs rupees in the previous year it is exempt. So if it is not exceeding 10 lakhs rupees, then nothing is exempt. So if it is less than or equal to, if it is less than or equal to 10 lakhs rupees, then dividend is exempt under section 10, the 34. So 10(1) we have, 10(7) we have, 10(34) we have. These are all the things which we will know when we discuss about exemptions chapter, but there is nothing called an exemptions chapter. We should know them as and when we encounter them. That is the basic point we should always keep in mind. So section 10(1) agricultural income is exempt from tax if it is received in India, and then section 10(7) as we already know, that is allowances and perquisites received outside India by an Indian citizen from the government of India is exempt. 10(34) dividend received from a domestic company is exempt if it is received an amount of less than or equal to 10 lakhs rupees. Up to 10 lakhs rupees it is exempt. Beyond that only it is taxable. And by the way, this 10 lakhs rupees is useful for calculations. For example, if somebody receives 11 lakhs, and how much will be exempt? 10 lakhs. How much will be taxable is only 1 lakh. So up to 10 lakhs, nothing is taxable if any dividend is received from a domestic company under section 10, subsection 34. Of course, there are a lot of other points here to be noted. It is not the entire provision we are talking. We are only knowing the broader thing. The details will come later in the chapter of income from other sources. But basically, for an individual who receives a dividend from a domestic company less than 10 lakhs rupees is exempt. That much if we know, that is enough now. So these are some of the points that we will encounter here in this chapter. Like this, there are other sections also that we will encounter, like 80, TTA and all that. We will come to them when we encounter them. So don't worry about not knowing them already. Just focus on knowing them now rather than worrying about not knowing them already. Now we know we should know them. How are we knowing them? Not by discussing those provisions. No, provisions we don't know them. We didn't discuss those provisions. While solving the problems, we are trying to understand those provisions are also applicable in this case. So there are two ways. One is provisions to problems. Second way is problems to provisions. Either way, ultimately, our job is to know all the provisions of Income Tax Act. How we learn doesn't matter. Objective has to be fulfilled. So this is the point to be noted. A lot of times, some students, not all, feel that this topic is simple, but the questions are complicated. They are not complicated. Only thing is that those are not purely 100% based on the known things. They are also based on the unknown things. So unknown thing, if we feel as complicated, that is a wrong attitude. Unknown thing, what we should do? We should know, not to feel it as complicated. That's it. So this is the type of questions we can expect in this chapter. So we'll have a trial of such question now, and we can continue with the solving of remaining questions in the coming classes. Now, look at this question. This is a typical question, 5 marks question, you can say, in the examinations, which can be expected. So from the following particulars of income furnished by Mr. Anirudh pertaining to the year ended 31st March 2020, naturally our previous year 1920, compute the total income for the assessment year 2021 if he is ROR, RNOR and NR. So already a question comes, how can the same person be all three? Nobody is going to become all three. Anirudh cannot be all three. Only point is what if. What if he is ROR? That is one different case. What if he is RNOR? That is a different case. What if he is non-resident? That is a different case. Same Anirudh can never be all the three. One person, one SSC will have only one residential status for a previous year. That is why the word used is if. That has to be understood very clearly. So imagine each of them as a separate case. Incomes are same, but the taxability according to the different residential status of the SSC could be different. This is how a typical question generally comes. And depending upon the number of marks, they can change the points, number of points. So this question has 5 points. We don't know. This question can be asked for 4 or 5 marks generally, like that. For any question in the income tax, normally the presentation has to be very good. And I'm not going to tell that every time. First of all, there should be a heading, a proper heading should be there. And what could be the heading here? Always it could be the heading more or less the same. Statement showing computation of dash. Statement showing computation of what? Dash what? That dash is what is asked in the question. Total income. Total income of whom? Of Mr. Anirudh. For which assessment year? For the assessment year 2020-21. So what should be the heading here? Statement showing computation of total income of statement showing computation of total income. Total income. So you can write this as a big statement also, or just you can write statement showing computation of total income. Below that, you can present it like this. SSC. Who is the SSC here? SSC's name is Mr. Anirudh. That's what is given there. That is Mr. Anirudh. I'm just putting it caps because it will be easy for you to read. Don't think that you have to write in the exam also like that. Then assessment year. Assessment year is important to be noted. What is assessment year we are talking? That is assessment year 2020-21. Always write assessment year only. Question may give previous year, assessment year, whatever. But you write assessment year only. So in general, we have to write this also as part of the answer just below the statement showing computation of total income. That is a heading. So SSC's name is Mr. Anirudh, okay, and assessment year is 2020-21. Now we have the statement. So statement is always about simply the answer here that we need. So what are the things that are supposed to be there? First thing is particulars. What are the particulars here? Those all will be same points will be there here, particulars. Then we have ROR or NOR and NR. Three types of residential statuses are there here. So we have simply different points to be made here. So that's it. That is going to be our answer finally. So statement showing computation of total income, all definitely here we are talking about in rupees. All we are talking about rupees. So that we can just write it on the right hand corner of the statement. And heading statement showing computation of total income, SASI name and assessment year. This is a proper presentation I'm talking. Every problem should we do like this, will time be available? That we have to manage in the exam. At least majority of the questions you should be able to do with this proper presentation of having a heading to compulsory, that there is no exception. SASI name, assessment year, if possible you can write do it for a couple of questions in the exam. If not, you can put it here only. Statement showing computation of total income of Mr. Anirudh for the assessment year 2020-21. Like that also you can put the heading. But main answer is this. This is going to be the one which is going to be valued, and the marks will be allotted for this particular main answer. So what are the particulars to be written here? So simply speaking, the particulars here to be written are the same things which are there. There is nothing new here. So what are the things, particulars, one by one you have to see. First point, short-term capital gains on the sale of shares of an Indian company received in Germany. So read it once again carefully. There is some short-term capital gain. We don't care short-term, long-term here. But on sale of what? Shares of an Indian company. So when the asset is situated in India and any capital gain or any profit arising from the sale of an asset situated in India is deemed to accrue or arise in India. Hence that is taxable for everybody. So 15,000 is going to be taxable for all the three people. That's it. That is the first point. What should we write in the particulars? Whatever is given in the question, that only will write in the particulars, nothing special. What will write here? Short-term gain on the sale of shares of an Indian company. Enough. Don't need to write as it is everything and waste time. You have to indicate that what you are talking about. So simply you have to use this short-term capital gain on sale of shares of Indian company. Enough. So that is 15,000 taxable in all cases. Why? Section 9, you have to refer to that in the working note. In the working notes, you should clearly write about why is this particular thing taxable. In the exam, you have to write full form, working notes, and in the working notes, you should one by one write what is working note number 1. So working note number 1 talks about the first point, which is the sale of shares of an Indian company. Though they are received in Germany, they will be taxable in India because they are deemed to accrue or arise in India in accordance with section 9. That's all. That is what you should write for point number 1. Then second point, dividend received from a Japanese company received in Japan. First of all, it is not Indian company. It is a Japanese company. So section 1034 is not applicable. So don't worry about exemption and all. No exemption. But the company itself is Japanese company and received in Japan. And how will it be taxable for a non-resident and RNOR? Not possible, because it is neither accrued in India nor received in India. But it will be still taxable for whom? It will be still taxable for ROR. So that is second point. You will write that dividend from a Japanese company. That's all you will write. You don't need to write the entire thing. What is that? You have to indicate dividend from Japanese company. ROR 10,000, RNOR and NR nil. Here some people write exempt, some people write not taxable. I would suggest you use the word nil rather than even putting dash. Here for calculation purposes I am doing that, but in exam you better use the word nil, NIL, nil. That is better to be used. In the exams, don't use any other words. In some questions it will be given as not taxable and all. Don't try to use that. If it is not taxable, you mention that in the notes, not here. In the main answer, it should be either a number or a nil, that's all. Not only here, any chapter, any question, main answer should have either number or nil, nothing else. So other all details, if at all you want anything else, that should come in the working notes. So that is the second point, dividend from Japanese company received in Japan, 10,000 rupees. That is taxable only for ROR, not taxable for RNOR and NR. Then the third point, rent from a property in London, deposited in a bank in London and then later on remitted to India through approved banking channels. So first of all, the property is situated in London. Property situated in London and deposited also in London means received in London, later remitted to India. Of course, remittances are not receipts. Just because it is remitted, we cannot consider it is received in India. Hence, it is not taxable for RNOR and NR at all. Not at all taxable. Why? Because it is not received in India, not accrued in India. Property in London, received in London. Remittance to India does not consider, will not be considered as receipt. So, not received in India, not accrued in India, not taxable for RNOR and NR. Now we have another point here to be noted, rent from the property in London. So, rent is another point we have here. So, some other provision, these are exemption provisions which we don't know earlier, now we know. We will come to know this ATTTA and all that. Now, let us have another provision, that is section 24A. Section 24A. So, section 24A is a section which gives a deduction of 30% of the rent that is collected. 30% of rent, right? So that can be considered as a deduction, under which head it will be there. Naturally, rent means income from house property. We will come to that. We will come to that later also. But now itself we know. So according to section 24A, if rent is collected, 30% of deduction can be given directly. So how much will be taxable then? Naturally, only 70% will be taxable. 30% will be allowed as deduction. That is section 24A. It is not exemption, it is deduction. So 75,000 is not taxable fully for ROR. So what has to be taxable? If calculation is required, only 70% of that should be taxable. Or you can write in the working note separately showing 75,000 minus 30%, that is 52,500 taxable for resident and ordinarily resident. And why we gave this deduction? Because section 24A under the head of income from house property gives that. If the word used here is not rent from property, if the word used is income from house property, then we can assume that it is already computed in accordance with the provisions of the Income Tax Act. So then we don't need to give a deduction further, because here the word used is rent from the property. It is not income from house property. Income from house property is the word related to Income Tax Act. Rent is reality. So rent from property is just a fact that they has received 75,000 rupees. So according to Income Tax Act section 24A, since there is a deduction of 30% standard deduction available on the rent collected, we give that, and remaining amount of 52,500 only becomes taxable. That too only for ROR. For RNOR and NR it is not taxable, since it is neither received in India nor accrued in India. That's it. That is point number C. So I'm just writing this A, this is B, this is C. Then we have point D. In exam you cannot write like this, you have to write whatever is given in the description. That's what you should write in particulars. So D point is what? Dividend from RP Limited, an Indian company. Just now we discussed that dividend is exempt from tax under section 1034. Hence it is not taxable. That is exempt from tax simply. For all people that is exempt. So because it is less than 10 lakhs rupees, it is exempt. So for point number D, nothing is taxable. Then point number E, agricultural income from a land in Gujarat. That also same no? Why? Agricultural income is also exempt from tax. So under section 10(1) it is exempt. So that also shall not have any tax liability or taxability for any of these SSCs. So now we can have the total for all the people. These are the taxable amounts finally in relation to different types of SSCs. I'm just showing them to highlight. Don't do all these things or try to do this in the exam. This is because of what is being shown on the computer. We are doing all this. With handwritten things, it will be definitely different. But the presentation format has to be more or less the same. Statement showing computation of total income. SC name assessment here should be there. Whether it is a part of a statement or whether it is written separately like this, no problem. Then we should have details, that is particulars, and whatever is three different cases he has asked, those are three different columns. And once we have that, we'll have all the taxabilities which are all given here, whether taxable or not taxable. Accordingly, we will include those amounts here and then total them. We'll have final answer like this. Then working notes is the key. What working notes we should write here? Working notes can be written for each point, ideally speaking, but if time does not permit, don't try for that. At least write for main points. Wherever you can refer to a section number, prefer to write working note. Point number A. Yes, you can refer to a section number. Why? Because that is section 9, which is talking about incomes which are related to the sale or transfer of a property situated in India or deemed to accrue or arise in India. Since the sale of shares of an Indian company has happened, that is deemed to accrue or arise in India, hence it is taxable. So 15,000 rupees is taxable according to section 9, that you can write as working note number 1. So this can be working note number 1. Then dividend from a Japanese company received in Japan. No need a working note because it is received outside India and earned also outside India. It will be taxable only for ROR. If you have time, write it. Otherwise, don't worry about it. But point number C, definitely there should be a working note. Definitely yes, because there is a section that you are applying, that is 24A, wherein 30% of the rent can be considered as a deduction. So 30% of 75,000 once it is reduced, remaining 52,500. How did you get this? That calculation should be shown in working notes number 2. Same working note number 3 should indicate the dividend from Indian company exempt from tax under section 1034 since it did not exceed 10 lakhs rupees. That provision you should write. When there is a nil here, automatically there should be a working note. A nil always should be backed by a working note. Just silently writing the nil and finding the total calculation will not give full marks at all. Marks in income tax will come not for this only. Marks will come for this. Majorly they will come for this. So this is important. This is more important, working notes. And then fourth one also you can write a working note here, that is agricultural income from a land in Gujarat. And we should know Gujarat is in India. And because it is agricultural income earned in India, it is exempt under section 10(1). So many sections are always applicable in any particular question. The working notes is all about expressing them and impressing the valuer with our knowledge of various provisions of the act. This is how questions will come in the examination. It is not going to be just like MCQs, straight away we calculate something. Whatever you have been doing so far, those are only straight questions. But in the examination questions will not be like that. They will have multiple provisions, not only related to this chapter, maybe sometimes related to other chapters also. Because topic of those things has come, we have known those things. In this particular problem itself, we have used 3 different points. One is section 10(1) we have used, 1034 we have used, and 24A we have used. So these are the 3 things in this problem. In addition to the residential status and the tax incidence provisions, we have used. Like this, in any question, we might have to use those type of some other provisions. So we'll come to know as we encounter them. That is how the approach should be. With that, we can conclude today's session. Once again, before solving all the questions in detail in the next class, everybody should be thorough with the provisions. Revision also has to be completed. All the points, whatever are there in the chapter, have to be 100% understood and remembered. That is what is the precursor for solving of any problems. See, solving problems in income tax is just I would say a kind of procedure. It's like a routine. That is not what matters much. What matters much is the provisions, and understanding, interpreting, and remembering the provisions matters. Applying them is next step. But without the first 3 things, the last step will not be fruitful. So only just numbers, calculations and all will not give us any good marks here. It is more of the mixed type of approach. There will be numbers. What calculations will have? Minus division at the maximum. But majorly what we have to write is working notes, where we have to refer to the provisions that we only have applied. Working notes is nothing but whatever our brain has told us to do, that what we have to just express that in the form of working notes. That is how income tax presentation should be for obtaining the best marks in the examinations. And in the next class, we will solve all the remaining questions of ICA material in the chapter of residential status, and we can conclude this chapter by the next class. Till then, take care. Bye-bye. Thank you very much.